Okay, so for question or topic two, we're now talking about long-term care, right? So we've just looked at long-term care riders, but we also want to really focus on long-term care itself. And no matter if which insurer, right, we obtain appointments with, long-term care is a major focus, right? Because we want to ensure that individuals are well prepared, right, in case of a need of going into, right, hospice, case of need of, right, care, right, home health care, in case the need of going into um, community, right, care centers as well, at during old age. And so long-term care provides, right, one with preparation, right, if that occurs. So let's first take a look at eligibility, right? So just like life insurance, just like health insurance, there's underwriting, right? There is underwriting. So we just want to keep that in mind, right? Everything that we've talked about underwriting, everything we've talked about application process, that applies here to long-term care. And so again, right, one needs to submit their health information, right? And the underwriters need to assess risk, right? Because if an individual has many pre-existing conditions, right? If one has many chronic diseases, right? Then that will pose a significant higher risk than an individual with or with no chronic diseases in that case. So health status is definitely a requirement, right, to be approved, right? But even after one is approved, right, and issued the policy, and we'll take a look at the specific types of policies of long-term care in just a moment. But there's also something called an elimination period. Um, it's usually 30 to 180 days. More commonly, it has been 90 days, but it can vary. And essentially, right, it is a period of when the right long-term care is needed, right? So if long-term care is needed, two, right, when the benefits are paid out. Right. So it's that waiting period of, okay, well, I need to file, right, a claim because I now meet the eligibility requirements of the ADL requirements. We'll take a look at that in a moment, right? But whenever a claim is filed, right, there has to be a period, right, 30 to 180 days, right? That one has to wait before receiving any LTC benefits, okay, from the company. And this is right again to control risk, right? To control costs and ensure that we see in the health insurance too that we also have these periods, right? And to ensure um, there is that period that the insured has to pay out of pocket, right? And that there is, as I mentioned, that cost control. Now, when I mentioned, right, just a moment ago, claim filing, right? Well, can we file a claim anytime we want, right? Can the client file a claim anytime they want? No. And so a eligibility requirement for filing claims, right? For filing claims to begin with is that the client has to meet this requirement here, right? The client cannot perform at least two activities of daily living, which is also abbreviated ADLs. So they have to not be able to perform at least two of the ADLs, right, in order to really file a claim or start receiving benefits in the first place, right? And so ADLs include toileting, bathing, eating, right, dressing, grooming, transferring, right? These are the ADLs. And right, the insurer has to show proof that they can't perform these ADLs, right? And so that's where we'll take a moment to look at where, skilled nursing care or home health care is really needed, right? So let's just take a look at just these terms that we might see on the exam, okay? Outline of coverage, right? Document that provides a summary of the key features of insurance policy, no matter if it's life insurance, health insurance, long-term care, right? There's always some outline of coverage, right? That outlines, right, the benefits, limitations, and exclusions of the policy, right? It provides these policyholders with a clear, concise overview, right, of what is covered and what is not. We also have the buyers and shoppers guide, right? So this is to provide potential, right, insurance buyers with general information about the products, right? So this is usually more broad, right? This is if outline of coverage is basically featuring what are the provisions, right, with one specific policy, but buyer shopper's guide is like a list of all potential products that the company, right, such as Nationwide or Transamerica sells. And so it is a more comprehensive guide, right, that allows one to make informed decisions, right? One might want to compare, use this guide to compare, right, the policies between two different companies too, right? In that case, agents sometimes might utilize this to help explain, right, information to the clients, right? That's often only common too. Just want to keep this in mind. All right. And then we just want to know that in terms of like advertising, right? Because when we use those guides, regulations, right, we want to advertise. We're pushing towards advertising, right? Providing clients with a good overview of information. But it's important to note, right, as I mentioned before, with like ethical behavior, with preventing unfair trade practices, right, that there has to be certain phrases and words that are not utilized, right? They can't be misleading, right? The words have to be have to protect, right, the interest of the insurance companies, but also the policyholders too. Okay. And so we just have this code provided by this association, right? That basically ensures that, right, we have fair, right, advertising, right? Not misleading advertising. Okay, that was just some kind of some information there. You might see these terms on the exams, just keep them in the back of your mind. But the key things that we want to look at with long-term care are here. So the first thing to start off is are the three key levels, right? So there's three key levels of long-term care. We have skilled nursing care. So this is the most comprehensive type of care. So if we're kind of thinking about this like and kind of like a hierarchy, right? Like a ladder, kind of. We have this pyramid, right? You have three distinct layers, right? And on the top here, right, we would have our skilled nursing care, right? Skilled nursing care. Okay, so this is where, right, we have 24/7 medical treatment, right? 24/7 medical treatment. And yeah, it's going to cost a lot, right? That's why we have these long-term care policies, right, for individuals who want to ensure that they're not using up all of their savings. They're not exhausting all of their savings due to this, right? Because as you know, it's really comprehensive, but it also costs a lot, right? So that's skilled nursing care. We also have intermediate care. And so this is less intensive, but but still provides, right, that supervision under medical personnel, right? So that's intermediate care. Okay, so that would be like a hierarchy. We have our second intermediate care, right? Our second layer. And custodial care is non-medical care, right? So non-medical care, right? But even if, you know, we don't have any medical personnel, right? These individuals still need assistance, right, with their ADL. So, they might have individual with dementia, right, or Alzheimer's, and they can't, for example, look back here, groom, right? They forget how to bathe, right? And they don't necessarily need medical assistance, right? In many cases, but they need assistance still with moving, with transferring, right? Or with eating and bathing. And so in that case, right, custodial care might be more appropriate. And for sure, it's the least intensive because there's no, right, the patient isn't in, doesn't need immediate life support, right? If something were to happen to them, but, right, they still need help with their daily routine, right? Okay. And then we also look at some other types of care. We're just diving into more specifics here. We've looked at home care versus home health care, right? And I mentioned these terms before, but with home health care, right, it's a type of care that medically um, licensed healthcare professionals provide. So it's provided through, right, the medical personnel. With home care, it's with non-medical personnel, right? So again, right, it's really similar to what we've really just talked about, where you might see these terms depending on your state here as well. So I just want to take some time to talk about it. But home health care, right, it does involve these licensed, right, medical personnel, while home care, right, it doesn't involve medical personnel, right? But it might be with, helping with meal preparation, right, hygiene, right, bathing, like what I've just talked about too. And then we also look, or I mentioned in the beginning, right, continuing care communities or continuing care retirement communities. So we've talked about our three levels of long-term care. And oftentimes, right, one at first might only need custodial care, right? But eventually, over the years, the condition gets worse and worse and worse and worse. So what happens? Well, they're going to need eventually maybe skilled nursing care, right? So what happens now? Well, an option is that they can move to a different facility, right? Or these CCRCs actually help with locating all of that care within one location. So instead of moving, right, they can just join these CCRCs and they won't need to change locations. They don't need to go to a different facility, right? They can still receive different levels of care within the same facility. We also have alternate care, right? So when, sometimes where non-traditional approaches of care are unavailable, right, we might need non-traditional forms of care. So that includes adult daycare, right? Telemedicine. And with this, right, we can see that adult daycare, right, is where sometimes the supervisor, right, of these elderly adults might be at work, right? And so what happens is adult daycare provides services for these individuals. And then we also have hospice care, right? Hospice care is not to treat individuals, but to provide individuals with terminal illness opportunity to right, still obtain support from surrounding individuals, right, from family members, so that they are comfortable, right? But it's not for any types of treatment because they only really have a couple of months, right? Or a few years to live from there. Okay. Right. And then really quickly, we just have three more terms that we want to look at. That's first is case management, right? So coordinating and planning healthcare services. So how do you know we know, or the insurance company know, right, what type of care is appropriate, right? And so we have these case managers that help to ensure that the patients, families, and healthcare providers are in the loop of, knowing which care plans are needed, right? What's the future, what's the prognosis, right? What are the future needs of the patient? And we also have medically necessary or appropriate. That's another term we want to be aware. And this is where, right here, right, we want to ensure that the patient is receiving appropriate care, right? And so that's also the work of these case managers, right? Ensuring that appropriate care is provided, right? And it's important for insurance coverage and payment, right? Insurance coverage and payment. And then lastly, we have these unintentional lapse in insurance policies. So this is where, right, we have a second individual, right, that is reminded about premium payments so that the primary holder doesn't forget, right? So don't forget, right? Just think about, oh, don't forget. It helps individuals to remember, especially if they have cognitive impairment, that they need to pay premiums, right? Or it might lapse. Even if it's unintentional, right? We still don't want it to lapse. So kind of provides it with the primary holders the backup plan. So before I talk about this, I do want to go here and review questions 5 and 6 really quickly because I know I'm talking a lot with that. So let's go ahead and take a moment to review through some of those policies that I've talked about before I go into wanting to finish up with the riders with long-term care. So let's go ahead and look at number 5 and number 6, and we'll go over them shortly. All right. So for our first one here, we would have, right, skilled care, right? So that would be medically necessary services, right, that can only be provided by licensed medical personnel. So those are the most intense, right? The most intense type of care. The second one is that we have A, right? So with home health care, right, it is always requires a medical personnel, but with home care, it can be provided through non-medical personnel, right? But only with individuals that need some sort of assistance. Okay, so I just want to go do that really quickly. Just as a quick review. So now let's look at some the times, the riders, and some compensation policies with long-term care. With long-term care policies in the state of Georgia, these policies must offer benefits for at least 12 months. And that might be different. So here we look at the star to help us to, right, review back to our state's pre-licensing class just to make sure that we're not missing anything. And inflation rider must be available along all long-term care policies, right? So it must be offered, right? It must be offered. Now, it doesn't mean that the client has to, right, select it. This doesn't mean that it has to be added on, but it just means that it has to be available, right? It has to be available. There has to be an option, right? Now, amounts received under long-term care are excluded from income because they're considered amounts received for personal injuries or sickness, right? So they're used to like offset, right, the expenses, right, utilized for, right, these injuries, right, sicknesses, for long-term care, right, for skilled nursing care, which, as I mentioned, costs a lot. And there's usually a limit on these amounts, and the limits are just for inflation annually, right? So, right, again, this is for a cost containment for the insurance company. Now, remember, right, I've talked about why an inflation rider must be made available. And so well, now I want to think about the reason, right? And so the inflation rider ensures that although, right, there might be a devaluation of money in the future, right, the client still has the option to protect themselves from that. And we've also looked at this, remember, with the CPI, right, or the cost of living rider too, right, earlier, and it's really related to this inflation rider, right, the cost of living rider. Okay. And then one other thing that we want to take a look at is the long-term care partnership requirements. So this also exists in other states as well. But we do want to go back to review through our pre-licensing course if there's any extra information that your state adds to their exam so that we're not missing any information. But in general, long-term care partnership requirements is formed through a partnership between Medicaid, not Medicare, Medicaid, and long-term care insurers like Nationwide. And this allows individuals to have quality care without depleting their assets. So what this means is that we know that Medicaid, right, is a government program that helps to pay for long-term care. But to qualify for that, right, one would usually have to use up, right, most of their assets first, right? So that means, you would have to pay out of pocket costs for that elimination period, right? And from other costs, right, deplete most of your assets first before you are able to receive any Medicaid benefits. Now, this partnership allows one to save up, right, some of their assets and not deplete all of the assets before receiving or qualifying for Medicaid benefits. So let's look at the scenario, and hopefully this will better explain, right, just the general outline of what happens without and what happens with this plan. So with this plan, suppose you have $200,000 in savings. You need long-term care and apply for Medicaid. Normally, you would have to spend most of that $200,000 before Medicaid would pay off your care or start paying for your care, right? And that would leave you with very little, right? Because you have spent most of that. However, let's say you have the same $200,000 in savings, but you bought in partnership care, right? So in this case, Medicaid allows you to keep $100,000 of your savings and only requires that you spend the remaining $100,000 before Medicaid kicks in. Now, this doesn't always apply to individuals, right? Some individuals don't need to apply for Medicaid. Remember, Medicaid, we'll look at in other modules, right? Especially with social insurance, Medicaid, the purpose of it is to help individuals to get back on their feet, to help individuals who need the assistance, right? It isn't like Medicare, right? Where if you have worked a number of hours, you get, if you have paid income, right? And a part of your income through taxes, right? And social security benefits are paid out. Medicaid isn't for everyone, right? And so it really just depends. But we do have this partnership or plan for select individuals, right, who might want to keep some of their savings, right? So we do want to know that it does exist, and it's between Medicaid and private LTC insurers. Okay, so now let's take a look at some review questions here. So our first question and our second question is a review on what we've talked about in part one or topic one. So it's a good time to kind of review everything and see if we remember this information here. Okay, so our first one here, we would have B, right? So we've talked about principal sums and capital sums for the AD&D rider. And then for number two, when we look at the guaranteed insurability rider, right? The insured has the right to purchase what? Well, additional coverage, usually at specific ages, right? Now, it can also be in certain times, such as childbirth, right? But it wouldn't be at retirement age. Retirement age, usually the policy wouldn't allow one to obtain coverage, and changing jobs is usually also not a eligibility, right? It isn't part of the eligibility for the rider. Okay, Now let's take a look at two more questions to review our riders really quickly. So number 3 talks about the LTC rider, and number 4 talks about the waiver of premium rider. Okay, so for this one here, long-term care riders, so which one is false? Which one is false? And the answer is D, right? Because the purpose of the long-term care rider, right, is that one can utilize some of those death benefits ahead of time, right, to pay off expenses related to skilled nursing care, intermediate care, right, custodial care, home health care, right, related to LTC coverage. Number 4, right, remember that condition, right, with eligibility is that the insured has to be totally disabled, right? So that was the requirement, right, for this rider to take effect. Okay, and we already did number 5 and 6. Let's look at 7 and 8 here. So we're still looking at long-term care, and we're looking at some of the policies related to it, and also hospice care as well in question 8. Okay. So for number 7, our answer would be C. So the long-term care policies are continuously renewable, right? So like as long as the premiums are paid every month, right, long-term care will always stay into effect. The waiting period, remember, is not it's not usually longer than 365 days. We took a look at that. For the waiting period, it's usually around 30 to 180 days, right? And now it's typically around 90 days, right? The elimination period, right? That's also called the elimination period. And so for B, right, coverage for pre-existing conditions, right, those are for sure either excluded or there is usually a longer waiting period. And for D, right, benefit cap no more than 50,000, well, usually that can be more, right, with long-term care, especially with long-term care, there can be higher benefit caps. For number 8, what is the primary purpose of hospice care? Hospice care, right? Yes, it is to provide individuals with comfort, right? During their final phase of that terminal illness.